I have backtested 5,000 trades, as you can see by my FX replay right here. And in today's video, I'm gonna show you what strategy works best for me. I know the ICT traders are gonna range in the comments, but hey, y'all can remain broke. We're going to keep it simple, and I'll just show you 3 steps of my liquidity strategy. So the first step is obviously gonna be identifying your liquidities, okay? So as you know, the market goes from one liquidity to another. And so you're gonna come into the day and identify your liquidity above and liquidity below, right? And whilst price is ranging, you don't try to guess whether we're going for the highs first or the lows first. You just patiently wait for one of your liquidities to get hit, and then you buy or sell accordingly. Whether we sweep the highs first, you look for shorts. Whether we sweep the lows first, and then you look for buys. It's all a matter of patience here, because you know, as soon as we sweep one of these, if you mark them well, and if you mark good enough liquidities, you know there will be a reaction after we sweep them. You also gotta keep in mind of the higher time frame bias, of course. We can have liquidities above, but we can have another liquidity just above this one, and price might sweep it, might deliver a small reaction, but then later might continue to go upwards as there is more liquidity, as we're overall bullish. So you gotta also keep in mind of those factors. But just as a day trading strategy, this is already pretty good. These liquidities can be your previous daily highs, right here, and this could be your previous daily low, for example. This price action could be Asia, and now we're coming to London. You're just waiting for Asia highs to get swept or the Asia lows to get swept, and then to trade accordingly. This could also be London, and maybe you're trading futures, and then you're waiting for one of these to get hit. Just make sure you have your liquidities marked, and you know that people are putting their stop losses here. And these are some examples like I've just mentioned. You can also add perhaps some support, resistance, trend lines into the equation. But I just prefer to keep it more with the horizontal type of liquidities, because trend lines tend to be subjective, and relative to different highs, different lows, people draw it differently. And so the trend lines are more like a confluence to me. But yeah, I'll look to trade more the horizontal lines once they get swept. Next, we're gonna hop in the smart money trap. So a lot of you were probably already knowledgeable about the liquidity part. Mark 2 liquidities, we wait for one to get hit, and then we either buy or short accordingly, right? But a lot of you are not aware about smart money traps, because a lot of SMC/SE3 traders only look for one sweep to that liquidity and then immediately buy or short accordingly. And yes, the price will reverse there, just not at the exact point that you think of. Because once we sweep the liquidity, price will deliver a reaction in the lower time frame. So say you have your liquidity, price sweeps it, and it delivers a reaction. And what this is gonna do is incentivize SMC traders to jump in, as we just swept the liquidity and people got trapped. The thing is that over 90% of people must be trapped in the markets, okay? And 90% are not just trading support resistance. In these days, a lot of people are trading SMC and ICT. So you always, most likely, will need to wait for a double sweep. It's just better confluence, okay? It will just give you a better win rate, a better chance of actually winning, being on a trade, as you will exactly spot the moment the price will reverse from. Because although the zone is correct, their entry isn't the best, because the first sweep will most likely become a trap. So the first trap is to trap the support resistance traders. Then once we finally do the sweep, the second one will be to trap the SMC traders, okay? And it will look something like this. You have your liquidity right here, okay? Say the liquidity is this line. It gets swept, right? We have this ultimate high that made this ultimate low that did a sweep, right? Price will deliver a reaction from it. Right now it's making a change of character or break of structure, whatever you would like to call it. And SMC traders will most likely be putting their order blocks around here, because this low made the sweep of liquidity. And we delivered a change of character. What's gonna happen here is that price is gonna take them out again. Well, not again, but as you can see, in this low, we took out the support resistance traders, right? And in this low right here, we took out the SMC traders. So now that everybody's out, that's where I position myself. And that's where we go over the entry fact. Okay? So once a trap or double sweep, whatever you like to call it, I'm just not trying to make names, all right? I'm not trying to remain concepts of my own. I just call it double sweep to make it more understandable for you guys, as it is like a double sweep. You do one sweep, you do a second sweep, all right? But once it has been executed, I tend to place myself on a stop order above the M5 structure / candle that has made the ultimate sweep. So it could be a wick, it could be a candle, something like this. Whereas you can see by the candles where we've done one sweep and then price has gone up, made that overall reaction to call in SMC traders right here on the lower time frames, and then a second sweep. All right, this could be M15 or either M5 candles. But with the drawings right here, you can see the same scenario as we did here. You'll see price sweep the liquidity, okay? Deliver you a change of character, calling people to trade this order block right here. They're gonna get stopped out by this low right here, and then we make the good breaker structure, the correct breaker structure. This breaker structure is a fake one. This one is the correct one. And because this was a trap, this will become a trap. That's to say that SMC traders will most likely guess where the market is going to reverse from at first. But just because we do a second sweep, they're going to think, oh, we're not actually bullish because I got stopped out right here. We're actually bearish. So let me short from here as this low, as this high, sorry, took this liquidity. This looks a mess, sorry. As this high right here swept liquidity and we're still bearish. So let me short it from here. And then they go stopped out again. So they get stopped out on the longs, they get stopped out on the shorts. That's the SMC and / SET life. But to show you some examples, we got some screenshots right here. You can see that we sweep the liquidity once, all right, this black line right here. We go up, then we sweep it again, okay? 2 sweeps. We sweep the liquidity. This was actually also equal low. As you can see, the line stretches out from far left and it does a double touch here. We sweep it violently, okay? As you can see, this is manipulation by these impulse candles. In my language, a sell in order to buy. And as you can see, 1 sweep gives you a reaction, 2 sweeps. But this is just based off the candles, because I'll show you in some scenarios where we actually have a breaker structure that's made and then a second sweep into that liquidity. But you can do this in 2 ways. You can either go for just the structure like I've drawn right here, or an actual 2 sweeps, as it will most likely in some cases be the exact thing, okay? Such as here, where you can just see by the reaction of the candles, okay? Because a lot of people don't just trade change of characters, they actually also go for candles reactions, right? Patterns of candles. And as you can see by this beautiful sweep of liquidity, right? A lot of people will be trading that. As you can see, beautiful reaction to the upside. A lot of people are hopping in due to the reaction of this. And then we print another candle that sweeps below this one, okay? Meaning all the people that were seeing this beautiful reaction and buying from it just got taken out because they put their stop losses around here, okay? And then as you can see, price went super up. As you can see, sweep of liquidity, 1 sweep, 2 sweeps, and it's doing change of characters below following this first sweep. Same thing here, 1 sweep. You can see the next candle opened right here. It went below this one, making a change of character, and then second sweep into it. And people got trapped by placing their stop losses around here. And this is all in recent price action, boys. Now, let's go over the FX replay tool and let me show you a simple trade that you could have taken on GU on recent price action. Okay, so as you can see, we're bearish, but that doesn't stop us from buying essentially because we're still swapping liquidity to the downside. And as you can see, we're consistently going down. We go up here, right? But then end up going down again. So in the higher time frame, just on H1 in here, you can see that this is clearly a smart money trap. As we deliver the change of character and now we sweep it, right? That's a high time frame smart money trap. Liquidity, same thing. That doesn't necessarily mean we're gonna be placing ourselves right here again, because if it's the next day, if this is the overall liquidity, we need to wait for 2 sweeps. So let's make this look good and professional. So we have the liquidity right here. Let's mark it in red. And we have the high of the cycle right here. Okay. and it's also making relative equal highs and the previous daily high. Okay, so we look to draw liquidities. We want one of them to get swept, but we also want liquidities in our direction, because if we sweep in a liquidity, that's all right, but do we have reason to go to the other direction? So as you can see, it's currently London session and we just swept this liquidity, but we're always waiting for a double sweep. Okay, so now we have swept it, and you can see how we did 2 sweeps following that liquidity sweep, and you can see on the M5 as it does sort of 2 candles. Even though it's not the best looking, I would have preferred this to do a better looking trap on it, as we are in a different session from the overall session that did the first sweep. All right, so I would prefer to see the same session do 2 sweeps following the liquidity. Regardless if London has swept the major one already, I would prefer New York to sweep this twice. But sometimes you can have exactly this, where we already did 1 sweep on 1 session of the major one, and then you have the second session following that do a second sweep. All right, meaning sweeping that same session that swept the major liquidity. All right, I know it's getting confusing, but just think like this: whatever session you want, just look for it to sweep previous session. Okay, if you're trading New York, wait for New York to sweep London. If you're trading London, wait for London to sweep Asia. So then, as you can see, this was the fake breaker structure, and this is the real one. So let's say we would have been here on a stop order. Right now it's a bit too late, I skipped too fast. 3 hour right here, don't even need to go for the structure. We're gonna do a limit just because we're kind of late, but we would have already been on stop order. Looks like we might not be getting tagged. Yeah, but yeah, you can see the overall picture. We would have been tagged in the trade, and we would have gotten from one liquidity to another, because that's how price moves. It's all about a liquidity cycle, right? We wait from one liquidity, which is this one, to another liquidity, because this was a trap, guys. Okay, this order block right here, this would have become a trap, and it's also making relative equal highs like I explained, and you have a overall trend line here, right? 1 touch, 3 touch, 1 touch, 2 touch, 3 touch, with this following one. And whenever price dumps like this or goes up like this, right, goes up like this or dumps like this, dumb people SMC traders like to put order blocks right here for some reason, because this low or this high was the one that made the huge move, and so they place the orders right there, and price most of the times will take them out on the markets. And boys, as soon as we see the upside liquidity, guess what? 1 sweep, 2 sweeps. Hey, could we have a short from here? Let's see. No. And guess what? I don't have a 100% win rate. So that's the lesson right here. Don't think this strategy works all the time. Okay? It works 40% of the time, but if you equip that with a 3R risk reward, then you're of course profitable. All right? 40% win rate, 3R, that's more than enough to keep you on the blues, to keep you on the greens, to give you a profitable edge. You don't need a 90%, you don't need a 95%, all right? The guys that are doing that, it's cool. But most of the times, to achieve that high of a win rate, you have to have a super small risk reward. And in those cases, you'll most likely be a negative risk reward, which would translate to a high win rate, yes. But I mean, you can win 9 trades out of 10, but 1 trade can almost wipe out all the profits, or all the profits. But look, go test this out by yourself. Wait for a liquidity sweep, wait for a smart money trap to be executed, meaning a double sweep into it, and then try to position yourself on stop order, as price tends to sometimes not come back to tag you in, as it did right here, as you can see, if you were to be placed on a limit. That's why sometimes I'm able to predict the absolute highs or absolute lows, and price just moves super quick from it to tell me, okay, you're right, here's your profit, no drawdown. But if you took value out of this video, make sure you give it a thumbs up, comment what you think. But yeah, see you on the next one, boys. Peace out.